Matrimony reported revenue growth deceleration and a slip in EBITDA margin led by a 5.7% fall in matchmaking EBITDA and a rise in EBITDA loss in the marriage services segment. Recently acquired Shadi Saga is now fully integrated and has 1 lakh listings. Revenue grew by 1.9% over Q3 FY22 and 9.4% over Q4 FY21, driven by 8.4% and 1.8% rise in matchmaking services revenue on a Y-on-Y and Q-on-Q basis to 110.6 crores, but it's still significantly lower than FY19 levels. OPEX slowed in the quarter and fell 5.9% sequentially to 18.6 crore rupees. However, advertising and promotion expenses remained elevated at 43.2 crores in the quarter and 162.1 crores in FY22. Unlike wage inflation seen across tech companies, Matrimony's employee cost growth was slow at 4.8% YOY and minus 0.6% QOQ and helped offset the ballooning ad and other expenses. EBITDA came in at 18.6 crores, up 7.6% YOY but down 5.9% QOQ as slowing sequential OPEX growth still outstripped revenue growth by 1.7%. EBITDA margin slipped 140 basis points sequentially to 16.8%. Net profit stood at 11.7 crores, up 1.8% over Q3 FY22. The company announced a dividend of 5 rupees per share and a buyback of up to 75 crores. Matrimony will buy back shares amounting to 75 crore rupees up to a share price of 1150, leading to 6.52 lakh shares. This is in addition to the dividend of 5 rupees a share, hence working out to a total cash return to the shareholder of 86.1 crore rupees, which is 4.5% of the market cap, and broadly positive for minority shareholders as management indicated not to be participating in the buyback. Matrimony's quarterly paid subscriptions have grown by 25% between Q4 FY20 to Q4 FY22 to 2.3 lakhs and on an annual basis grew at 13% CAGR over FY20 to 22 to 8.94 lakhs. Matchmaking average transaction value, however, shrank by 2.6% between FY20 to 22 to 4,806 rupees and therefore reflects the bottleneck to revenue growth and margin expansion as competition impacts ATV and ad and promotion expenses. The company's marriage services segment is almost 1/3 of the FY20 revenue. While the management is confident of seeing 100 crore revenue run rate sooner rather than later, but appears to be a challenging goal as it would mean a revenue run rate of 9 times of FY20 revenue, 25 times of FY20 revenue. For Q1 FY23, the management has guided for a double-digit YOY billing revenue growth at the group level and a triple-digit YOY revenue growth for the marriage services segment. We reduced our estimates and now forecast a 2-year CAGR of 11.2% over FY22 to 24 and 22.4% EPS CAGR. We are currently not baking in a multifold rise in wedding services revenue in FY24 to 25. If it occurs, it would provide an additional upside. Matrimony is a good tech play with zero debt along with market leadership. At the current market price, it trades at an FY24 PE of 23.7 times and with a PEG of 1.06x and has a decent upside. Investors can add it with a medium to long-term view. Risks: significant rise in marketing spend due to competition, slower than expected revenue growth of the wedding services business.